Hey everyone, welcome back to Corporate Decoder, the place where we untangle the confusing world of finance and business, and sometimes find a stock split staring us in the face today. We're diving into a report from Reed's Incorporated, a company you might know better for its beverages, especially its ginger ale. But what's really going on beneath the fizzy surface? Well, let's just say they've made a rather significant change to their stock, and understanding this change is key to understanding their current situation. So what we have here is a Form 8K filing. This is like a public announcement when something really important happens at a company. Something that investors need to know about right away. This particular 8K is all about a change to their corporate structure, specifically their stock. The big news here is something called a reverse stock split. Now this sounds complicated, but think of it this way. Imagine you have 10 $1 bills and you want to make them fewer, but more valuable bills. So you swap those 10 $1 bills for one $10 bill. You still have the same total value, but fewer individual pieces. Reed's has done something similar with their stock. They've combined their shares to reduce the number of shares out there and hopefully make each share worth more. This move isn't just a random decision. It is authorized by a major stockholder, D&D Source of Life Holding Ltd, which owned over half of Reed's stock, gave the board the okay to do this. They authorized a reverse stock split at a ratio of not less than 1. For -3 and not greater than 1. For -9, the company chose a 1. For -6 split, which happened effectively on the 31st of October 2025. This certificate of amendment, officially filed on the 28th of October 2025, is the legal document that makes this 1 for -6 reverse stock split happen. So after this split, they had about 8.9 million shares of common stock outstanding before they got rid of any leftover fractional shares, the actual trading on this split. Adjusted stock will begin when the market opens on the 3rd of November 2025. And for the number crunchers and traders out there, the stock will have a new CUSIP number, which is like its unique identifier, 758,338,404. Why would a company do a reverse stock split? Well, usually it is to boost the stock price. A low stock price can make a company look weak or unstable, and it might even risk being delisted from an exchange if it falls too low by combining shares. Reed's is effectively raising its share price, making it look potentially more attractive to investors and more compliant with exchange rules. So this filing is mainly about amending their corporate documents to make this stock split official. It is a structural change designed to give the stock a fresh start in terms of its price. The key document attached is Exhibit 3.1, the actual certificate of amendment to their incorporation documents. This is the paperwork that solidifies the 1 for -6 split. Now, let's look at this more broadly. What does this tell us about Reed's? It suggests they were facing pressure from low stock price. Perhaps they were struggling to attract new investment or maintain their listing on the OTCQX best market. A reverse split is often a sign that a company is trying to signal stability and renewed potential, even if it doesn't directly change the company's underlying business value. From a Warren Buffett perspective, you'd want to ask why the stock price got so low in the first place. Is it a temporary setback or a sign of deeper business issues? A reverse split by itself doesn't fix any business problems. It is more of a cosmetic fix for the stock price. The real question is, what are they doing to improve the actual business performance to justify that higher stock price? We don't have detailed financial tables in this specific filing, but the context of a reverse split often comes when a company is trying to clean up its balance sheet or prepare for a new phase of growth or acquisition. The fact that a major stockholder authorized this also tells us that leadership is aligned on this strategy. Looking at the situation's strengths might include the fact that the company has a recognizable brand in the beverage market, and that a major shareholder is actively involved in steering it towards a new strategy. Weaknesses could be the underlying reasons why the stock price fell so low in the first place, and whether the company can actually translate the stock price increase into improved business fundamentals. Opportunities could lie in using this new stock price to potentially attract more investment or facilitate future mergers or acquisitions. Risks are that if the underlying business doesn't improve, the stock price might falter again after the initial boost, and investors who were betting on a low stock might be disappointed. In conclusion, Reed's Incorporated has executed a 1 for -6 reverse stock split. This is a significant structural change aimed at improving its stock's appearance and trading dynamics. It is a move that signals intentionality from leadership, but the true success will depend on how well the company can improve its actual business performance going forward. What is your take on reverse stock splits, and what do you think this means for Reed's future? Drop your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more deep dives like this. And don't forget to join our Discord community linked in the description below for more discussions and insights. Thanks for watching. See you next time.